Hey gang, BA here with the Blockchain Cartel. It's Sunday, 23 January 2022, and in today's short video we're going to talk about the crypto blood. All that blood that's pouring out into the streets right now, wrecking everybody's dreams, shattering their hope, and giving each of your spouses confirmation that you're a complete and utter jerk about crypto. So before we go further, we are not financial advisors, can't offer financial advice, and everything we do here in crypto is extremely risky. So please allocate capital accordingly, and what I'm about to tell you is just my opinion, that's all. Alright, so let's go ahead and get started. Alright, so need to take a look at our narrative. I want to remind you why we're so bullish on crypto going forward. We believe that the legacy investment models are dying. Bitcoin will outperform legacy investments going forward, and that we can absolutely trounce the returns of simply holding Bitcoin by focusing on low cap crypto gems and blockchain technology. That is our narrative. Let's get right into it. And here at the Blockchain Cartel, just want to make sure we remind you that we are here to help you learn about crypto investing, show you how we trade, and why we're just so focused on this going forward. All right, what you see before you right now is a weekly chart of Bitcoin going back to far left corner here is in 2011 to current time frame. I've got 1, 2, 3, 4 areas marked out. You see some arrows on the top and some shaded stuff here on the side. All right, the stuff here on the side are volume nodes. So you can see this orange line that juts out. That's point of control in a weekly time frame, which is way down here at the 6,400 level. Will we go back down there? Again, my opinion, don't think so, but that's where the preponderance of volume was accumulated for this thrust up that we're currently in right now. All right, so these arrows on the top, I just simply went back in all of the halving models, the halving time periods, and just drew from low, from halving to high, halving to low, and then I just carried those arrows forward, duplicating them, the symmetrical nature of it. So all I did was copy paste, move it forward. You can see here, nailed the high on this one, got the high on this one. So the symmetrical cycle that we were in was playing out to a T. I carried it forward to the current cycle. And I had this arrow put up way back in here, before we ever had the run up, and I mean, it nailed the high right to the month so far. Did I think that was the high? No, because I'm playing for this area up here to take profits. And way back here in 2019, when I started investing in this area, accumulating positions, my thought was I'm only going to take profits when I get the blow off run into the red zone. If I miss it this cycle and it doesn't happen, then I'm holding to the next cycle. That's it, because I believe in the narrative going forward. So just so you know my position, what I'm trading for. All right, we also have these lines up here are from halving starts to the actual low for the cycles. Again, they're symmetrical. I'm not just willy-nilly putting stuff up here. This is their exact lengths. So what does this one tell us? Well, what it tells us is, again, a scenario. So far it is playing out. All right, it is playing out. So that top that it called from our halving cycle time frame to the top was within a month of being accurate. What this is telling us is that if that scenario plays out, and again, I only have to underscore if, is that a low point will materialize somewhere around that November time frame. this is long-term stuff here, guys. So it could be 1 month, one side or the other. It could be completely off. This is a cycle here that we're trying to validate if these current time segments are still valid or not. So far, it's nailed this high. So does that mean we can crash all the way back down to? No, I don't really think so. But again, we don't know. I'm going to explain more in just a minute. But anyway, I thought that was pretty interesting. Again, this is just a scenario. It's not me telling you this is what's going to happen, but it is a possible scenario. So for me, carrying this information forward, if we get around and we chop all the rest of the year between, say, $28,000 and $60,000, and we get out here and it's just rally, failure, consolidation, dump, and we get out this October time frame, and we get back down in the lower spectrum of this logarithmic indicator scale, then that's a heavy time to start piling it back on again. I just want to give you some possible scenarios. So scenario one is that this is valid, that the high is in for this cycle. That's a bleakest outlook. I don't personally think that's it, but we're talking scenarios here, so you can war game. All right, so this scenario, high is in. We're going to bounce around, consolidate, have a good time to accumulate, and then we get out here to October, November time frame and put a final low in before we start ratcheting up for another, potentially 2.5 year bull market run. All right, that's a scenario. Here's another one. So let's go ahead and get rid of that. I don't tell you this stuff so you lose sleep over this. This is just so you can war game for yourself. All right, also what we have here is moving average. With the moving average, it's a 21 period moving average. And you clearly see, very simple, we're below the moving average. It's a good accumulation time frame. Okay, so that's all that tells me. For long-term traders, that is a great time to accumulate in this area here. So if you're dollar cost averaging, you're putting dinner money into Bitcoin, Ethereum, some of the top coins we've been talking about. That's been a very, very profitable strategy. So just keep that in mind. When Bitcoin closes back above the 21 period weekly moving average, then for you traders out there that want to spice up things a little bit, that's when you start trading back to the long side again. All right, you want the odds stacked in your favor, and up moves above the 21 period moving average are much more probable than trying to pick a bottom on the downside. Okay, there's no reason to, if you're trading, there's no reason to try to pick a bottom. If you're accumulating, you just toss in a few shekels here and there, man. You just want to put in $10 a week, $50 or so, whatever you're comfortable doing while we're in this period. That's just a really smart approach. All right, so let's take a look at what I really wanted you to see here, and that is these purple boxes I have coded out right here. So the significance of these boxes are, these are lows in the market that have been objectively identified. All right, I love using technical tools to objectively identify things, to put context around it, and that's what we've done here. It's just a simple RSI indicator available on every platform. Okay, so nothing kooky here, nothing at all. So what I look at is when the RSI on a weekly time frame for Bitcoin gets below 40. Okay, you got the scale on the right hand side. When it's below 40, that kind of marks out what I call the beginning of accumulation phase. So for long-term holders, that's a good time for you just to start, chunking in some shekels. So let's take a look at this period back here. So the width of this coincides with when we went below 40 and when we emerged out of 40. All right, same thing here. This one was a little more brutal. It actually went from September 14 to April 15. So that was a good 7-month time frame, and we didn't even hit a low then, but we had what was called an RSI divergence on that low right there. So anyway, great time to be accumulating. Same thing here. We dropped below 40, somewhere in this November time frame. We emerged from it by the RSI clearly getting above it in March. So March, November. So that's another 4-month period. And lo and behold, we just now entered one, just the last 2 weeks. So I'm a little off on this, but I wanted to make it wide so you could at least see it. So we're about 2 weeks into a plunge below. So this is a great way for you to pull up a charting platform, throw an RSI on a weekly chart, and just take a look at this, okay? They all plot the same, so it's not one charting platform doesn't mean that the RSI is better on it than it is on anything else. All right, so one tell of when we will be out of this area is when the weekly RSI gets back above 40. All right, and we get priced back above the 21 period moving average. It's just that simple, okay? And then high likelihood that we're back into another bull market mode again. But here's what I want you to look at. This is a cycle that's really, when I looked at this, I was like, wow, this cycle's as predictable as, the Bitcoin halving cycle. So take a look at this. We made this low back here. We popped out. So we'll call it November of 11, and then we made highs November of 13, 2 years later. So we popped out of it somewhere around here, around May of 15, and made highs in December. You can really argue that we didn't really get out of that until this time, so August time frame. But then 2 years and some months later, we're making another high. All right, we're here in this big wide area back in 2019 when I started accumulating. We come back out March of 19, and so far December 21, we've actually November we made the highs there. So again, 2 years and some change. I thought that was fairly significant that 2 years after we emerged from these deep probes that caused the RSI to register deep below the 40 mark, in the indicator, when we come out of those, 2 years later, we're at astronomically higher prices. Okay, again, just want you to know that that's what has happened. Doesn't mean that's what's going to happen going forward, but boy, I always say this as a trader, I always have to play things that have been working until they actually stop. So you can objectively determine for yourself now when we are emerging from this deep pullback that we're currently in, which has completely decimated altcoins. It's the most brutal pullback since in the 2 years I've been accumulating crypto. So I've had a lot of 35-50% pullbacks in altcoins, but a lot of these things have just been left for dead. So okay, I've spent about 15 minutes talking you through something I probably should have only spent 5 minutes on, but I just wanted you to get some of the things I'm looking at here. And hopefully this has been a help to you and given you some free, cheap methods to objectively put context around the move that we're current in relative to the market price that we're seeing in Bitcoin. Again, High prices mean nothing. Low prices mean nothing. It's all relative to where we are in a cycle, and we'll never see a $400 Bitcoin again. So 30,000, 20,000, 25,000, somewhere there may be like a generational buy if we were to ever get there. Anyway, I'm going to leave you with that, and hope it was helpful once again. This is BA signing off.